What's up, Trader's Edge? It's Mark Sebastian, your only option. Well, the Fed is out. If you missed me talking to the Fed and what their decision meant, it's going to be the next video. But I'm going to tell you what happened as Powell was speaking. I'm going to talk about what really moved markets, why we went from looking real bullish to flat on the day. We'll take a look at VIX. We'll take a look at bonds. And I'm going to tell you that one stock you need to be keeping an eye on. So with that, let's dig in. All right, traders. So the news is out. The Fed kept rates the same. There was an important change, though. All right, and I want to show you this. So heading into the announcement, July was about 15%, and for a rate cut, it's now down to 10. However, September was about 60% to get a rate cut. It's now closer to 70. So what's happened is there is now extremely strong expectations of a rate cut in September. That is what the market is betting. So if you read the language, if you listen to what they had to say, they were a bit more dovish. Powell wasn't overly dovish in his responses. Didn't say anything earth-shattering either. So I think the Fed, if you had to say one way or the other, it leans toward being a little more easing than where we were before the meeting. So if the meeting was generally pretty good, how did we go from up 30 to down $1.85 on the day? What is that one indicator I keep telling you guys to follow? Oil. Oil was, when we were up big, oil was down on the day and down by a decent amount. It recovered to close up on the day. And if you look at the one-day chart of oil, here's where it starts to rally. And kind of the takeoff point about 12:30. Let's see what SPY did during that time. What do you know? The peak of SPY was right after energy bottomed. If you're not watching energy, you're not watching the market. You can use USO, you can use WTI futures, Brent futures, whatever you want. You have to be looking at oil. When oil rallies, this reminds me very much of like trading in 2007 and 2008. When oil was $140 a barrel. Oil going up, market would roll over. Oil going down, market would rally. We're in that mode right now. Now, for different reasons. Oil moving is our kind of heat gauge for what's going on in the Middle East. But oil coming off, that's signaling, hey, maybe things are easing. We want some resolution one way or the other out of what is going on in the Middle East. That's where things are heading your way. Looking at VIX, still managed to close down on the day despite the S&P rolling over. Futures term structure, nice and contango-y. All things still point toward we've had peak volatility in April, and we're still and we're just kind of continuing along this calming period. Bonds, a little different story. I didn't love what I saw out of the bond market. At first, we saw the 10-year and the 30-year drop. We saw the 10-year get down to about 4.33 in yield, and the 30-year down near 4.85. They did rally, still below 4.4, still below 4.9, but TLT well off the highs from the day. I'd love to see bonds kind of hold up here, even if there is some resolution of the conflict. That would be much more supportive of the market getting a really strong rally. All right, so what is that stock that I am telling you to keep an eye on? The answer, Goldman Sachs. After a really rough period, it's gotten its way back to about 635. I'm liking up to 680, maybe those new all-time highs. I think the Fed speak today is very, very good for a name like Goldman. All right, folks, if you missed Andrew and Hannah talking about option fingerprints, you have to watch it. Markets are closed tomorrow. Be a good time to check it out. You can click it here, or it'll be the second video in the YouTube feed after my Fed talk from today. So check that out. If you're watching me on YouTube, please like and subscribe, leave a question or comment, and I'll be happy to answer you. I am Mark Sebastian. I am your only option. Have a good